It's the last trading session of January, a month with extreme volatility, and we've got a lot to cover from Amazon's disappointing earnings to the Bank of Japan's surprise interest rate cut. Joshua Mahoney joins me now from London, a market analyst with IG. And Josh, I'll start with Amazon. Of course, the retail giant missing analysts' earnings expectations by a big margin. Is this part of the company's long-term plan to reinvest its earnings back into the company?
I think this is just a case of people expecting a little bit too much. Now, bear in mind, yes, we did see the estimates miss massively. We saw EPS, rather than hitting 154, which is what people are expecting, hit that $1 mark. But net sales up 20%. We saw revenue largely in line with the expectations. And really, when you look at the business, they have been suffering in terms of the sort of FX headwinds, as they put it. And I think it's just a case of people having too much expectations. We have seen the brick and mortar firms really suffer throughout the Christmas period, and everyone was looking to Amazon as being the big benefactor of that shift. We haven't necessarily seen it to the extent that people thought, but we've still seen a very big move in terms of generating cash for the company. We've seen their profits hit a quarterly high in their 20-year history. So I don't necessarily see it as badly as other people within the markets, considering that 15% drop we saw immediately after release.
Well, and we talk about disappointing and missing the street's estimates, but it still posted its largest quarterly profit in its history.
Exactly. And, going forward, I think they're likely to continue growing. I don't think that this all of a sudden undermines anything to do with the business. You saw Prime membership up 51%, and we're likely to see that grow massively. I personally am a Prime member, and actually it's the kind of thing that once you actually sign up to it, you think how clever it is. They seem to all of a sudden get you buying more of their products, and also utilizing the TV services as well. So that's a great product. We've also seen their cloud-based services really increase quite heavily in terms of their user numbers. So, there are some beneficial things to pick out of these numbers. I just think on the headline stuff, the EPS, it really did suffer compared to estimates.
And we also saw news reports on Thursday surfacing that Amazon might be looking to get into the music streaming business to compete with Spotify and Apple Music. So pretty interesting stuff. I want to move now to the Bank of Japan, cutting interest rates now in negative territory where many economists were expecting more easing. So a surprise there. What do you make of the move to cut interest rates? Was this the right move?
It was a move, quite frankly, and people were hoping for something. I don't think people had too high estimates or expectations coming into that. I think at the end of the day, when you look at the balance sheet of the Bank of Japan, you compare it to GDP, so as a proportion of your GDP, and you compare that to like the UK and the US, the Japanese have actually been doing a hell of a lot compared to everyone else out there. So in terms of how much more QE would be needed for them to actually all of a sudden start moving towards that 2% inflation rate, I don't know whether it's necessarily going to work. I don't know whether this is necessarily going to work either, because negative deposit rates insinuates that people are essentially holding on to, or banks are essentially hoarding their cash funds and putting it into the Bank of Japan, and instead they could essentially lend it out to people that wanted to invest that money elsewhere. Now, look around you. If you're in Japan, especially, look how close they are to China. The downturn in China is going to have people worried in Japan, and they're notoriously risk-averse in Japan anyway, and therefore, even if they do get offered potentially good rates to actually take out loans to start businesses or invest more, I don't necessarily think this is the time that they'll actually be doing that.
All right, Josh Mahoney, a market analyst at IG in London. Josh, thanks so much for joining us. I'm Scott Gam, and you're watching This Street.